Okay, can somebody, good afternoon, traders. Welcome to the free webinar. Today, I'll be doing a weekly review of the charts to see what trades we'll be looking at this week. Some of the traders are not getting sung. Somebody please type for them again? I don't know. We'll have this problem like forever. It's pretty easy. You know, when you log on, you see that icon. I think they give you the option sometime. Victor, can you do it a bit more detailed for them? Where is it? Yep. Okay, thank you guys. That's good. I guess everybody will get sung now. Let's go. So today what I wanted is I want to review. I'll go through the basic charts, the majors, some of the crosses, and I'll take some questions at the end, right? So if you have questions, can you keep your questions to the end, because I wouldn't be reading through the chat. I can only do one of the two. And let's go daily review. We will do a lot of daily reviews, which means we'll be looking for daily structures where we think this chart is going to go on based on the daily chart. And then from there, we will look for trade setups during the week, which I'll be posting. So in general, if you look at this, you can, I think all of you by now has figured out the way I trade and the basic structures that I use, which is an impulse, a correction, and an impulse, right? And if you look at this, you can see an impulse. You're seeing a corrective structure here, and you're likely going to see an impulse coming out of there. So this chart is not only for the week. I think this is like for the month review, because if this break here, we will have this thing going down for about a week or two, right? Pretty much what you will see. You will see a big dollar movement to the downside. So we're still within that structure. And if you look within the structure, the question is if you have a possibility of this thing going up, right? I think that's the basic question you're asking. Can this thing go up to the top here? And yes, there is a possibility that we've made a move up, we've made a pullback, made a move up, pullback. And there's a chance that this could go back here, right? So in the case of them breaking this, we can look for this move to the upside, which means we will see more downside in the euro, more downside on the Aussie and the yen, on the New Zealand and on the pound, right? So we can see that happen, which is going to give us more upside on CAD and yen and Swiss, right? That is very possible. While we are in this structure, that is possible. But right now it's consolidating in a sideways. And I wouldn't be looking at the trades in terms of 60 minutes, because we can actually do that when we get into the trading view community and I started posting charts. But for this one and for the euro, I'll do that. I'll look at them. So as you can see, we're getting some consolidation here. So right now, anything is possible. If you pull a line across here, you can see that anything is possible. We are actually trying to break out of this consolidation, right? So the question is, if they don't make this trade to the upside, if we don't get this to the upside, we're going to get this to the downside. This is the trade you're actually looking for, the bigger trade here. Or a breakout of here, a consolidation, and then another trade up, right? Very simple. So on the euro, what is that giving us? On the euro, what it is giving us is we are in this structure, and I posted this structure some time back, right? That we're going to make a move back to the top here, and very likely we're going to break out of this structure. I actually posted that possible development of how it could happen. And from that time to now, from this time to now that I've posted, not much changes. As you can see, they're actually right around here, not going anywhere. And the mere fact that they're not going anywhere, it means we're not getting an impulsive move. So we're not going to probably have this structure going up so fast. It could happen. It's not going to happen so fast. So in a 4 hour, what are we looking for here in a 4 hour? We're looking for more of a consolidation. Come on, the charts are not changing. Give me a second. Okay, finally we got it. Yep. If you look at this move going up, it's not going up very impulsive. As you can see that, right? It's kind of going up slow. We're still within this structure. We're still within the daily structure. So if this goes up as this goes up, if you look across here, you'll see 1, 2, 3. We looked at this as 1. We were looking at this as 2, and we were thinking that this was going to go up like that. Well, that didn't happen. What is going is it's going sideways. And if it does that, there's a chance we're going to get one more of this to the downside. There's a very big chance that if they go very slowly to the upside, is that when they hit that trend line, we're going to get a trade to the downside rather than the upside, right? So We will keep an eye on this as this structure develops. We don't know how it's going to go right now, but if it does what we think it's going to do, we probably have one more leg to the upside here. There's a possibility for one more trade to the upside there, and then from here we will see if they go down or if they break out. So there's a very good chance for a trade. I normally don't make trade calls in this session, and I don't give you trades in this session, but there's a very good chance that you could make your own decision to take this trade here if it breaks. It's not a trade call. I'm just telling you a trade you can take if you want. If it breaks here and you can take this trade here with a stop here, right? This is a trade we took in our trading room. I'm not telling you to take the trade, so don't come and tell me I took the trade and I lost it. The reason we take this trade is we understand structure, we understand the risk to reward in this trade, and we liked it. We think there is one more wave up to the top here based on our structure as a 5-wave structure going up. And we took this trade because the risk to reward is very good, right? This is what we are risking with a stop under here. And if it goes, our target is way at the top here, right? I'm not telling you to take the trade. I'm just telling you of a trade we took, right? This is not a trading session. This is just my views of what I see, right? So basically, we are anticipating a move back to the trend line, and then we will make the decision because this is starting to look like a C wave going up. As an A wave, it's looking like one second. It's looking like an A wave, a B wave, and it looks like we're coming up here for a C wave. So when we get somewhere around this area, there's a possibility they could go down. We'll keep an eye on it to see what happens. If they break this structure and take us out, which means if we lose that trade, if they break this structure and it goes down, we will be looking for a sell opportunity. We will first look for a sell setup, and then we look for the trade itself, right? Let's go. Pong. Pong, by the way, is a little surprising. Honestly, we were looking at this structure. It was pretty slow, and we were looking at this structure as a B wave, an A possible B for a C up. And then they broke the low. They actually got very impulsive and broke the low. So one of the things that I probably wasn't looking at, but is possible, we still have to look at it, we haven't looked at that, is that probably this was a leading diagonal structure and we missed it. Leading diagonal structure in a C wave, right? So if that is the case, then the B wave was pretty short. The B correction is pretty short. We'll have to look into the details of it. We will do that. But now we are looking at that as a C wave. So if I put it in one higher time frame, this is what we're looking. We're watching for a continuation pattern of this thing. So this move could go much more to the downside. So what we are looking for is if it's going to go more to the downside, at some point it has to make a correction. They will have to make a correction back to this level, and then we will get a very sharp move to the downside, right? So what are the trades for this week? I don't think this week we're going to see that type of correction. And more so today. Today, I think we will see some consolidation in here, which we are getting right now. We already broke this low, so there's a possibility, just one possibility, that we may be heading for the upside, right? There's a possibility that this is making some kind of a correction for the upside. If not, if they keep going down, and they're likely go down, I'm not interested in this sell right now because of the divergence we have in the chart, right? Once they break this low, they're going to give us divergence, and there's a very strong probability that this thing could come maybe to this 270 and start going back up for a deeper retracement. If I showed you in the 4-hour, there is a very high probability of a deeper retracement coming, right? This move down will have to make some kind of a correction before it goes. A much deeper correction. So if you look at the whole move down, you can see every time they made a move about that size, they correct. Every time they made a move about, even if you start from the top, about this size, which is, let's say, how much pips is that? That's about how much? 1,160 pips. If you look at this, we have about similar structure here. Yep. We have about the same thing, 1,032. So you probably have about the next 50, 60 pips there, and then it's over. I don't want to be trapped at the bottom with a trade, right? What I want to do, their problem, Yep, the sound is on. Everybody can hear me. If you're not getting sound, is on your side. So somebody should type and tell them, right? They're not getting sound, is their side. What we're looking for is the deeper correction, something like this. Give us that correction, and then we will have a bigger trade to the downside, a much bigger trade, right? That will give us good risk to reward. A sell right now is possible. You may get a short sell, but it's not good risk to reward anymore, right? You're losing that risk to reward in the trade. If you take probably a 15-minute trade or so in here, you may get it. I'm actually already looking for corrections to the upside, and then we will decide what to do with that. Aussie coming down. We broke this structure and we are going down. We do have some divergence here, but it's not the end of the move. So what I'm looking for is some kind of a correction. I'm looking for some kind of a correction in Aussie, some kind of a correction in Pong. Euro, one more little move up to finish to the top there. And all of them could probably, if this happens, we could find a very nice trade to the downside. So what I think this week will happen is that this week we will most likely find a lot of corrective structures, which means smaller corrective moves to the upside, the opposite of what they did last week. Last week was when they fall pretty strong. This week we are not expecting too much, movements. We are expecting more very short movements, but we can still trade them, right? So you got to move up. If you get a pullback and you get a next move up to like this and they start to come down, you will have a breakout trade, right? If they break these trend lines here and they go up, we would look for more deeper move to the upside, something like this. We'll have a corrective trend going up. Corrective trend, let me show you one of a bigger, the higher degree corrective trend, what they look like, something like this, but much bigger, right? So you can still trade this. Every pullback you can buy, every pullback you can buy, once you see that the trend is starting to go up, every pullback you can buy, which is what we will be doing. If we see this structure start to go up, every pullback. Selling to the downside, yes. There was a 618 sell here this morning if anybody sold it. The move could be pretty short, which means if this comes here, we get divergence, it starts to go back up, right? So I'm looking mostly for some corrective structures this week. If everything changes and we don't see those corrective structures, they start to go down, we will look for setups that are saying sell. This is not a sell setup, not right now where it is. It was this morning if you sold it, and now you need to put it to break even, because as it is right now, it is not a sell setup, right? So nobody has muted you. Can somebody please help him? I don't know how come he got the host has muted him. He had to have clicked something really, really weird to have that. Everybody can hear me, right? So somebody please help viewer 373. Tell him he's not muted. Let him unmute himself, right? Somebody tell him to unmute himself. That will help him. Your yes is actually he thinks that he's been muted. Everyone is muted? Oh, okay. He wants to speak. Is that what you're saying? I thought he doesn't have sound. Okay. Yep. Okay, great. Let's go. New Zealand daily. New Zealand daily, we posted this. Remember that chart? Everybody was saying, well, they don't know what is going to happen to this, and it's breaking up to the upside, and it's not going to go down. And, we just said we're looking. And remember, I said something in one of my last webinars. Most of you may have been there. I said something that really freaked out a lot of people, right? A lot of especially people who are selling signals and who are offering some kind of signal service or all of that. They really freaked out when I said, and even on YouTube, one or two people made that comment. When I said, we know the direction our pattern should break to. And I'll repeat that. We know the direction the pattern should break to. Only one direction these patterns should break to. If it does that, we will trade it. If it doesn't, we will not trade it. If the pattern didn't break in the direction you were expecting it to break, then you don't have a trade set up. And you let it go. But you must know the pattern. You must know what that pattern looks like. And you must know the direction it will go. That is called forecasting. If you tell somebody it will go up if it goes up, or it will go down if it goes down, that's not forecasting. That's bullshitting. Right? You're BSing the guy if you tell him this pattern was very clear. It's still in the downtrend. I'm expecting a downside. That's it. Full stop. When this changes, I will change my setup. I will change my forecast. I will change the structure. But based on this pattern you're looking at, There is only one possible direction this pattern should go. It's that simple. I don't know why those people freak out. Nobody knows where the chart is going to go. I never said I know where the market is going to go. I said we trade patterns, and these patterns have only one possible direction they should go. They have a 90% chance of going in that one possible direction. And if they go, bingo, we got it. If they don't, you can go and ask me for stop on trading view and create a whole havoc of nonsense. You're still not going to get anything out of that. But you can try to make yourself a fool, right? It's not going to work. It's very simple. One direction. What is it doing? One direction. One single direction. I remember when I started posting these charts, if some of you were in TradingView very early, when I just came on in TradingView, I was getting attacks a lot, and I was getting attacks from those who were the top then, right? And one of the guy told me, he wrote in his chart, somebody said, well, Anil posted a chart showing another direction. Hear what he said. Professionals don't use arrows. Hey, I looked at the last couple charts he posted. They're all with arrows. I'm like, wow, you're learning something, my friend. Finally you're learning something. Professionals don't use arrows. I don't know who were those professionals that don't use arrows, but he's gone back to using arrows. So I guess he's probably demoted himself from being a pro to back to the level where we are. We the not so pro, right? It's very funny when people say things that they just say it. It doesn't carry any weight. It doesn't carry value. It doesn't make sense sometimes. It's very simple. You must have. Some of you would remember that comment. I clearly remember that comment, and the only thing I asked under the comment was, "Who are the pros?" That's the only thing I asked under the comment. Who are the pros? Pros don't use arrows. You want to tell me who are the pros you're talking about? How dare you call yourself a pro? That's by nature is crazy. I never said I'm a pro trader. I'm just a trader. It's up to anybody else to decide that but me, right? And the next thing I like traders like to use, pros don't do this. Here's what I want to ask them. Have you guys really done a survey on all the pro traders in the world? Do you know all of them? Can you name a couple that you did the survey with and find out what they do and what they don't do? Yeah, but these guys write things like these, like professionals don't do this. How the hell you know that? Where did you pull that out from? Push it back right there. Because it's nonsense. You don't know it. You're guessing your way. You probably heard somebody said that somewhere, and it's a hearsay. It's not based on knowledge. Things we do in our room is based on knowledge. You will never hear me say pros do this or bankers do this because I don't know. I have no clue. I've never interviewed any one of them. I've never done a survey of pros. Actually, I've never met anyone that I, called himself a professional guy. I met a guy who's running a hedge fund. We had lunch, but he never said he's a pro. He never said, hey, I'm a professional trader. He just said, okay, I have this hedge fund, and we discussed it. We talked somewhat. We had lunch, and that was it. But people just like to say things. They say all kind of stuff. Where they get it from, where they pull it out from, nobody knows. And they're willing to post it out there and argue with you that they know it. It's a lot of time. Let's go. So we're looking for this. You saw how the chart works. You saw what we are looking for. You see how they work. This is what we're going to look for now. If this gives us a correction, there are two options here. I'm going to give you the two options, and I may not be able to tell you detailed why, but it's something we looked at this morning. And there's one option that we are making an A wave here. We're looking for a 1, 2, 3 correction, and this could actually go back up. So you want to be careful of a possibility of this going up here, right? You can't ask the viewer 419. You can't ask the control. I'll do that. There's a second option. If this consolidates here, we're going to go down. Both of those, structurally, both of those are possible. If you look at the structure on the daily and the weekly and the 2 4, both of those structures are very, very possible. So for us, we would be looking at what this chart does when it comes here. If it gives us a corrective structure like this, we're going to have one hell of a trade here. And if you're with me, you're going to get most of that. It's one hell of a trade. You're talking about a trade much bigger than this coming. If it goes up, what we would do is we will try to get a smaller buy here, somewhere in here if we get a buy, and see if they crawl up to the top here. Because if they crawl up to the top here, they could probably go out of this structure, making it a 1, 2, 3 wave structure. Right? Which one out of those two is going to happen, we don't know now. That is why I don't have a forecast on this. And the reason that I don't know is because the correction is not over. So people may say, well, when a corrective structure is over, you know the direction it is going to go. So let me give you an idea. You have an impulse, you have a correction, and it will go. Unless and until this here is finished, there is no proof that you're going to get this. Absolutely none. So if you jump into this trade anywhere in here thinking it's going to go up, you're likely going to lose your trade. You have to have confirmation that this here is over, structurally, time-wise, and a setup to trade it. If you get all of that, you have a good trade setup and you will be in a good trade. If you don't and you jump into that because you have a feeling, because you think, because you know, you're going to have a problem. You need to wait for the setup to complete itself. Right now, this setup, the up one, why I posted this on top here? Because this setup was completed. When it starts to go down, to complete this setup, it needs to do a number of things. It needs to make an impulse, it needs to make a correction, and then make another impulse. This would be a completion that this pattern is actually going down to make this wave. That is not there as yet, right? So one guy wrote me, said, if you're giving all those information free in your webinar, why should I take your course? I was like, you don't take the course. Please don't, because you really don't know how much you're missing. What I'm giving you here is nothing compared to what you would learn in the course. But when you write me something like that, I'm like, okay, you don't take the course, right? Because he was very aggressive in his approach of what he wants and what he doesn't want. So I was like, okay, I'll stay away from you. Basically, it's not that simple, because you may be looking at an impulse correction impulse on a lower time frame, and on the higher time frame, that is just simply one impulse, right? The first option is a godly pattern. Not true. Here's the thing. I did. By the way, look at the webinar. You will see why. I have a webinar out there that I posted in YouTube that says why they work and why they don't work. Advanced patterns. If your assumption that you're making is that this is a three-wave pattern, that this is a 1, 2, 3 corrective structure and you should go up. And I just said to you, it's not the fact that it's going to do that. We need to first see whether it does this, because if it does this, we will be going down. And that is why on one option, your Gartley pattern will work if that structure goes. On the second option, your Gartley pattern will not work. That is if this structure works. And that is why I don't trade patterns, because their Gartley patterns are limited. It's like a tricycle. You have extra wheels so that you don't fall. You're learning to read structures. When you know to read structures, you don't need those wheels, extra wheels. You don't need patterns. You don't need to draw those fancy Gartley patterns, because you're looking at the same thing, but you're looking at the structure in general. You're understanding the theory of structure. You understand how structures develop. They're more complex than simple Gartley pattern. I've shown that, and I've shown it with a lot of people, and I'll just draw it back so that you see. Take any of these patterns in here. Where are they, by the way? Which one of these are the patterns? I think this one. Yep, this one. Nope, not that. This one. Yeah, these are the patterns. Nope. Which one has the pattern in it? That's funny. By the way, what happened to the pattern? Which one of these? Let me see. The AC one has, this one has a pattern. Oh, yeah, this one. Thank you. Take any one of these patterns. The basic concept of these patterns, let me just get rid of it. The basic concept of these patterns is that you're going to get a three-wave correction. That's the basic concept. All of them, they're built with the basic concept that you're going to have a simple three-way. You have an impulse, you're going to have a simple 1, 2, 3 correction. They're all based on that concept, whether you call them whatever you want to call them. They're based on the one simple concept that you're going to have a three-wave correction, except for the cipher one that they have. The cipher one is based on the concept that you have an ABC move down, and after an ABC, it is going to retrace. Right? Those are the two concepts in which they're based on. Now, most people use them wrong, by the way, so we're not even going to go into that. But this concept is the very simple concept of understanding corrective structures. Corrective structures could be 5 waves, they could be 3 waves, they could be much more complex than that. And I've actually showed you guys a lot of time. If you look at our webinar, you will see the Punkat where I show you that your Gartley would not even come close. And the concept is that you will draw it here. You will think that this, okay, this is, you got this and you're going to do this. and you have a wonderful Gartley pattern. Not true. That's what I'm telling you. It's not true. Not that I don't know Gartley. I know Gartley. I know all these patterns very well. I know the advanced stuff. I know how to read the entire structure without just drawing those lines in it. Because there's an option, like I said, that this is going to do this. And if it does that, instead of getting your Gartley pattern, you're going to get an impulse. Not only would you lose your Gartley trade, you will miss this trade to the downside. Here is the disadvantage of using that. Not only would you be wrong here now, and as one trader said, well, you get them sometime, you don't get them sometime, right? Not only would you not get this one then, you would lose a very good trade to the downside because of not understanding that it's just making a corrective structure and not the next impulse to the upside, right? Nothing is really wrong with the Gartley pattern except they're limited, right? Those patterns are limited. They're good, but they're limited. They're very limited in what they show. That is why they work sometimes, and that is why they don't work sometimes. That is what I wrote in the. That was the aim of the YouTube video to show you. Sometimes they work, sometimes they don't, and there's a reason why they do that. You guys should look at it. Those of you who haven't seen it, I think Gartley patterns, advanced patterns, why they work and why they don't. It's explained very clearly. For those who haven't seen it, go there, look at it. You will see why they work and why they don't, right? So let's go. We're going to watch to see what happens here, how this develops, right? And if we're anticipating some kind of a correction right now, I don't think they're going to go down very rapidly. They could. If they start breaking this structure here, I would look for a sideways and I'd look for a sell, a continuation pattern. But very likely we're going to get some deeper correction as we saw based on the movement that they already have. And if they make those corrections, we can trade it up like I just showed you. You can buy this. If you get it correct and you're getting a setup here, if it breaks, you can buy. And the reason you want to buy this is because if they move up to the top here, instead of doing this, right, you get a very good trade to the upside and you can keep that trade if they break, right? If they just go sideways, all you will have to do is take a break-even trade, right? And then wait for the sell setup. Very simple. If it goes sideways, you get a break-even trade. If it goes up, you get a good trade. If it goes down, you look for a sell. Right now, I'm anticipating some kind of a sideways move. And then we will see, right? So it's more of waiting in this. In terms of a sell setup, no, we don't have. Actually, we're looking for a buy setup here in a lower time frame. You can actually see this already. I'm already looking at this consolidation here for a buy setup, right? Remember, I'm not giving you trade calls here. Let me just remind everybody. I'm not saying buy this or sell that. I'm just showing you my view for the week, and I'm trying to show you more longer-term view rather than the short-term view. Swiss, we're in a structure very similar to the dollar index and the euro. As you can see that, there is a possibility they will finish this structure as a five-wave structure, and then we will see. There is a very high probability also that this structure, Swiss does not have to do what everything else is doing, could still continue to grow, making a higher high. Right? There's a high probability of that. Unless and until they break the structure, we're not looking for sell opportunities. Right? Short term, we're in this sideways move here. So if they break, we will be looking for a buy. If they come back to the low, which means if this correction continues, right? If they come back to the low like this, there will be a very good chance to buy to go up from here. Only the break of this structure will negate all of that, and we'll be looking for a big, strong move like this to the downside, right? There is a big, strong move. So short term, look for this trade up, or if they break this structure, it's a long-term trade after that. CAD. CAD is one of the interesting ones everybody was looking at, and I did this a number of times. I think we should go through back the CAD and longer-term structure because a lot of people have done this. I'll take everything out so that you guys could have a view of how we do. Somebody asked me to show them how I analyze the charts from the start. Basically, this is what I would do. Based on the structure we have here, I'm looking at this as a wave up, a wave down, a wave up, and eventually we should have either a correction or a total reversal. This is your impulse. See that? That's your impulse. Here's what we don't know because I don't have this chart. So I don't know whether this impulse was the end of the structure or whether that was the very first move down. I don't know that because I don't have what this is doing here. I don't know where this come from. We'll have to look at that in a yearly chart to tell, right? But based on what we have here, we know that when they move this much, they will have to make a correction to go back up. or come back down. So we're looking for a possibility of this thing making a correction because it has moved quite a lot. So on the daily chart, let me put it probably in the weekly first so you guys have a view what it look like in the weekly. It's still going up. On the daily chart, you can see we're still in the uptrend. So if you pull your daily uptrend, it's going to be this. Every time you move away so far, they come back. We move away, we were anticipating a pullback now to this level, right? Some kind of a pullback to this level to go back up if they want. We'll see a corrective structure. If they're coming down, we're going to see a move like this. We're going to see corrections, and then we're going to go. Now, we don't wait to trade, wait for all of this to happen to trade it, right? We will try to get it to the top here if we can. And for all of us, if we're going to get it to the top there, we'll go to the 4-hour. And we're going to let them break this structure. We're going to let them break out of that structure with a very sharp impulse. We want a very sharp impulse down. We want the corrective structure, and then we're going to look for a sell opportunity. Right? So I'll be posting this. Now, can this thing go up some more? Definitely. Am I interested in the upside? No. And I just showed you why I'm not interested in the upside. If you're interested in the upside in this thing, you should have been interested somewhere here, or somewhere here. When did it move that much and you're trying to be a buyer at the top here, and this is a top, whether it goes 100 pip more, it's still a top, you're trying to buy at the top. It could go, but you don't know it's going to go. And here's the bad part of it. People get trapped with buys at the top there. It starts to come against them. They move their stop. It goes some more against them. They move their stop. They pull the stop because it's going to go up. It has been going up. And then it starts to drop. And you lose your account. Right? Because now you say, wow, I don't know what happened. As soon as I go in, it started to turn. No, because emotionally, you're going in when it's almost ending. Right? So you have the full one on the web. Yeah, we can look at that. We have it. We can look at it later on if you guys want. Let's see. I don't want to go too detailed into that right now. So what we are looking for here is a turn of this structure. Let's see if we get a turn of this structure. And if it gives us a turn, it's going to be an interesting trade to the downside because you're going to have 10, 15, 20 to 1 risk to reward. If you get in that trade and you sit in it and don't come out, you're going to have a very good risk to reward. And that is what you're looking for in the charts. The whole idea of studying chart patterns is that you can have very good risk to reward charts. That's the whole idea of it. Getting very good risk to rewards, right? The idea is not that I catch 20 pips or I catch 100 pips. What's the relationship of the trade I'm taking in, right? So can I get 5 to 1? Is there a potential for this thing to go more? And if there's potential for it to go a lot more, you want to be in that trade, right? Those are the trades you want to be because potentially they can go a lot more, right? Not because this could go up, but this doesn't have a lot of upside potential. The potential is over, right? It has actually used up all the upside potential. There's very little remaining now. There may be some remaining in terms of 1 or 2 small trades. If you're trading that, that's okay. Nothing is wrong with that, right? But the best thing, if you want to have advantage on your side, is look for trades that are going to go much longer than you even want to stay in them. And you guys have seen a lot of those trades that I post, right? When I did the first one, which was the Euro New Zealand, everybody was freaking out. And then we got the Pound New Zealand, and then we got Euro. You know, there's so many of them, right? So you can see them. The last one is the New Zealand. It has potential to go. So let's see. Yen is in a big sideways move, by the way. We're making some kind of a flat there. You guys could see that. It's in a big sideways move. I think that's easy to see. If you look at the previous big sideways moves, you look at the previous big sideways moves, and you're looking at this big sideways move, you can tell which direction this should eventually go, right? I think that is pretty clear which direction eventually this thing would go with huge potential, right, to the upside. If you look at this big one, what happened? They all went up. If you were looking at a downtrend, it was pretty easy to say, look at a downtrend, see what happens. They make correction, they go. They make correction, they go. They make correction, they go. So we're going to look for a correction, and we are in a correction right now. We're in a correction, something like this. Let me see. Something like this right now. This is a correction we're in, or something like this, right? This size of correction we're in. So if you look back, pretty small, even compared to this. It's a small correction. right? But when that correction is over, as you can already see the direction in which I'm looking for this to go is upside. And this is the trade you don't want to miss. It's not about catching 10 pips in here. It's about not missing this trade. That's what trading is about. If you can catch 10, 20 pips in here, right? But the idea is you will have a one-to-one risk to rewards most of the time. And every time you lose one, you take some traders take more than one-to-one losses. So we've got to move down. We've got to move up. We're in a move down. It's not over. I think there's more to the downside. I have a strong belief there's more to the downside. Maybe we're going to get a correction right now looking at a 1 hour. If you look at a 1 hour structure, you notice we didn't go very far here. So there's a very high probability that this one is going to go back up some more here. And we will have one more downside to retest the low and then go back up, right? So it's going sideways and it's pretty much already there. Put it back in a 4 hours so you can see that. It's literally going down, up, and down. So we'll probably come and retest this low here. We may go a little lower than that, and after that we may see sometime this year a continuation of the trend, the daily trend, the weekly trend on the yen to the upside, which is more weakness in the yen, right? So, and remember, yen does not have to go with anything else. It doesn't have to do what the dollar index is doing or what the euro is doing. It could just get weak all by itself, right? The yen alone could be the only currency that is getting weak when everything else is getting strong against the dollar. And that is very possible, right? Nobody says that can't happen. It will happen and it could happen. It happened before and it could repeat itself, right? So we're going to be looking for yen weakness very soon this year. And that will be really amazing trading session because all the yen pairs will go. All of them will follow if yen starts to get weak, right? It will get weak across the board in relationship to everything. That would really be good trading. Pung, Euro Pung kind of pulling back. I think we short term, very short term, we have one more probably upside. Look for it to come. For the best trade would be, of course, if you wait for this to make a deeper correction like this and then go. But I think short term we could see one more of this spike up. So if you get the trade in a 60-minute, it's worth taking, right? If you get a 60-minute upside, it's worth taking. Euro Oz went up, not as much and not as aggressive as we would like it to go. Remember, it's in an uptrend. We're looking for this to go from here. We're looking for it to grow. I think it was from this point, wait for a pullback and then get the trade. So it's going now. What we are looking at is this stop now. Let me just take this out. What we are looking at is this stop. If they're going to go break that top, or is this just a 1, 2, 3 wave up and then we go down back? So in the 4 hour, we have some divergence, so you got to be careful there. Divergence is not a sign that it's over. Divergence is a sign to be careful. On a 1 hour, let me just give you a 1 hour vision of what we're looking at right now. On a 1 hour vision, there is a chance that we could come and retest the stop, right? Retest that top and then make deeper correction. There's a very likelihood. But first, watch it to come here and bounce for that trade, right? If it comes here and bounce for that trade, that would be great, which is comes back here, break the low, go back up, and then start to come down. So we'll be looking for a buy setup here. We're in an uptrend, so we'll be looking for a buy setup because I don't think they're going to break right now. We do have a chance that they're going to come down, but not right now, right? So let's keep an eye on this and see if we get a buy setup. I would like them to come back here first and then go up, right? So I'm not going in the buy right now. Euro New Zealand, similar structure. This one also has divergence here. So what we're looking for is more deeper pullback before they go, right? We're looking at some kind of a corrective structure in here, and then we can go. Every time they go, you need a correction. You need a correction in here, and then we will look for continuation, right? If we don't get a correction and they're reversed, we're going to be looking for sell setup, but I don't think they're going to reverse, right? As far as we're looking for, we're anticipating a move back to this 270, right? Something like this, climbing. So it's already climbing. It's climbing slow, but it's climbing surely, right? So what we want to see is some kind of a corrective structure, some kind of a sideways movement that will show continuation pattern, right? These were very good trades. Some of you made a lot of money in these trades when we started. Remember, we started the week with right here, the buy in somewhere in here. The very start of the session was when it's here and it went up, pull back, it's still going. So, how long you could keep the trade. That's the question. EURUSD, let's see what EURUSD is doing. Daily, weekly. We're in an uptrend. You can see that in the weekly. We're in an uptrend. We broke the top, no divergence. That's a continuation pattern daily. This one may not happen. It's still going. We don't have any divergence. We had divergence before. That's why we were anticipating that move. What you can look for here now is a corrective structure. Some kind of a correction like this. And we can look for more upside, right? So we're looking more for a daily correction. And the 240, that's kind of like a 1, 2, 3 pattern down. And you're already getting it. You're getting a down move. You get an up move. And then we can look for that trade up. Wait for this. And if you get that, you have a wonderful trade to the upside. Euro yen. Euro yen has been amazing. It kept coming down, although the structure hasn't changed very much. And we were looking for them to go up from here, from this point to go up, actually a little earlier from this point here. See, I have it posted here, this chart. We're looking for a buy setup, which never actually triggered also. Let me just show you the setup. We're looking for a buy setup. If it breaks out of there, we will be in the trade. See, we never got a buy setup here. It never triggered. We did catch this trade, though. Some of my traders, I didn't get this because I was in some other trade, but some of my traders got that one, right? I totally missed that because I was in some other trades when it happened, but we were looking for that trade up, right? And the break of this pattern. A lot of you would have remembered this one and a lot of trolls in that chart also. I don't know why they do that. And you got this. So what we're looking for again, guess what? Same setup, same trade. First, we'll be looking for this. And then if they break this structure, we're looking for that one. Only now the structure is slightly different. The structure is more like this. So what are we looking for? We're looking for this trade. When they break this structure, we're looking for this trade here. And if they break this, it's a huge trade to the upside. Very, very big trade to the upside. So keep your eyes on this one. This is a very nice setup. You guys don't want to miss it. Watch for the break of this pattern. If they do, we will get a trade to the upside. If they keep crawling down, I'm not interested. Right? It could come down. Let me just get this clear to you guys. This thing could come down some more. I'm not interested. The trade I'm interested in, I clearly showed you, is the one to the upside. We have patterns that should break only one way. This pattern here should go back here. And if it goes back there, I'm interested in it. If it keeps coming down, I'm not interested because eventually it will go back here. And this is the trade I'm interested in. Just like the previous one. A lot of you would remember I was posting this very early that we are looking for a breakout. First, we were looking for this breakout, I think, and then, yeah, we were looking for that breakout, which breakout give us a break. Actually, we took the trade here, 100 and something pips, break-even trade. Then we were looking for this breakout, which happened here, right? So actually, we took this breakout. My traders who were in this trade, they took this breakout, right? One second, guys. Let me just give me 1 minute, please. Okay, sorry about that, guys. Yeah. So, yep, this is the pattern. So the same thing we will do here. You're looking first for this break. If you get that break, if they come down lower, we will be looking for this break. And then we will look for that trade. Those trades will happen, right? This is not an if, this is a when, right? This is not an if it's going to go up. This is a when it will go up, and don't miss it. That's it. But the trade you really want to miss, the trade of the year, is if they break this one here going up. That will be one hell of a trade going. And every time we catch this trade is for the fact that we are expecting them to break that. The only time that changes if they break this low. So far, they haven't broken the low. Eurochief. Eurochief is a nice trade. If you look at the daily, you can see we're in an uptrend. They make deep consolidation. They go. They make deep consolidation. They go. So we're already in the upside. We broke out. We're consolidating, and we are ready to go. Yes, I'll do that. I'll share the YouTube later. 4 hour. Let's go. We broke out. Let me just show you back. Don't miss this trade. This is a good trade, by the way. Winner lows. Don't miss it. This was the consolidation. You see what they did? This is the consolidation. This is huge consolidation. This is what they're doing. So here's what we will do. You have to have a signal to go. Don't just jump in the trade. You're getting a consolidation here. See that? So if they do this, this is the trade you want. They're consolidating. Let them consolidate and break out. Now they're out of the bigger consolidation. If they do that and break, if you get the break. Because if they don't do that and if they don't do that and you jump in the trade, what you could find is they could do this. And then you say, but you said it's going up. I said, we would be looking at this structure, 1, 2, 3, and then this structure. This would be a total downtrend. So far, we're looking at it as a consolidation in here for an upside there. If this structure doesn't go as impulsive as we expect it to go, we will be out of the trade, which means if you take this trade here, if you get a consolidation here, and you take this breakout and it doesn't go within a couple hours, 5, 6 hours, take off the trade because it's not going to go. Especially if you get a sharp spike and it doesn't go, take off the trade. It wouldn't go. What they're going to do is they're going to change the structure into this, being an A, B, C here, probably to this level, and then go back, retesting the top. So if it doesn't go, it's not going to go. I'm looking at this structure to see if we get the consolidation ready to go. Right now, it's looking like you can have, if you want a short-term trade, 15-minute trade, you have a short trade that could happen like this. See that? 1, 2, 3. And then we will be looking for that trade up. This is our entry. If that happens, we have a trade. Right? If it doesn't, you don't have a trade. Let's go. Pangos. Pangos is an interesting one. Also a trade I showed you guys. And I've posted this in all time frame numerous amount of times, what we're looking for and what this will do. Where are all the daily charts I had here? I had a whole dozen daily charts posted here. None of them? What are the 4 hours? Let me see. We posted some of them in 8 hours and so they're probably not available. It doesn't matter. Let's go. So we're here now and we're looking for that big trade. The question is, will it go? Right now it's in a very nice setup to go. We made a move up, not very aggressive as I would expect, but we're starting to make some consolidations here. And there's a high probability of them coming here first and then go back up based on what they're doing here now. See this, what they're doing here now is not very aggressive. This structure is not very aggressive to the upside. What I would like to see is when they made this pullback, they did that. And if they've done that, we'll all be in that trade going, right? So right now, this consolidation is telling me that there's a high probability of them coming here. This is your sell trade. If you get a setup in there, take the sell. And if they break out of this one, we take the buy. Right? The sell to the trend line, exit it, and then we would look for the buy. Basically, right? So one out of the 2 directions, you're going to have this trade here. Both of them are very, very good directions. Let's see. Pound New Zealand. Some people are getting thrown off or they're signing off or something because they don't have sound. I notice we're getting from 57 to 60 people. 3 or 4 people have been getting problem with sound. So, I mean, that's 157 to 160. So, this is the structure I showed you guys. Remember this structure? So, what we're going to look for here is the same thing. A break of this structure will give us this. And a break of this structure will give us this. And then that. Right? If they break this to the downside, you have a small trade here to complete this pattern. If they break it here, the pattern is completed and they're going. Based on this structure we have, there is a possibility for one more downside. Structures sometimes have 3 waves, sometimes they have 5 waves. Based on this structure, on a lower degree, 5 wave is possible. So if the Pound Oz break, right, Pound New Zealand could also break here. this would be a good trade, but it's only to about this level, and then we're going to look for the reversal. If you look at the pound CAD, I posted this today, and because of these structures, I'm looking for similar trade. If you look at this, what they did was what most traders will call they made a mess, and they made a mess going up, and they're likely going to make a mess coming down. So I'm not looking to trade it to the downside, but what I'm looking at is if it makes that down move, if it makes this down move, we'll be interested in that buy, because if you look at the buy going up, the sideways were a mess, but when they took off, look what they did. They just went. There was nothing to stop it. So coming down here, I'm not interested because we may not get a good trade set up. But going up, I'm definitely interested. One, because of the speed with which it's going to go. See that? And two, because of the target, the risk to reward on it. So I post this to show you that I'm not really interested in the downside. This is a big correction. I'm not interested if it goes because we're not going to get a good setup. It's already going very slow. You can see this, right? You already don't have any setup in there. We're interested in the big trade to the upside after they've finished all of this nonsense here. See that? When they finish this, when they finish doing that, we would look for the trade to the upside because it's going to be pretty fast. That is the trade you want. So some of them like Punkat, those are exotics. Well, not really exotics, but we wait very long for them. Those are those pairs. They don't move fast. They consolidate a lot, but then they make one movement. You catch the movement and that's it. You stay away from them for months. They really don't move a lot that way. Pang Chief, stay a little away from this. We had some nice trades in this during the first week of the year. All of you remember. Right now, it's kind of like going sideways. I think we could stay away from it for a while. This is not a sell setup, not a very good sell setup as yet. Let's see. 15 minutes. No, not a good sell setup. See, it's not going very impulsive. Look what happens when they break with an impulse. They go. This is going sideways. Stay away from this for a while. Let it settle, and then we'll come back to it. Let's get a nice setup on it. Peng Yen, the one everybody's interested in, the one that freaks everybody out, right? And the one we posted and we said, that these patterns work. Let me show you this one, why these patterns really work, and when they work, how they work. Right? Remember when I posted this, we sold at the top there, and we were saying this is a sell setup, and everybody was like, see, it's a wedge. It's going to go only one direction. It is not going to go any other direction but one direction. This was also an ABC pattern. So this was going to break to the downside. It's a pity we didn't keep that trade because we sold it there in our trading room. And we got out, well, I got out much more early than most of my traders did. Some of my traders were still in. I thought somewhere here was where they were going to go, and that's it, right? They end up going much more than we expected. So now we saw this pattern that looks like an ending diagonal, and everybody freaks out because it didn't go. It didn't go, so what? It just changed the structure. We were never in the trade. We never had a trade set up. And the reason we didn't, what happens to the chart? Come on. The reason we didn't have a trade set up because the structure never broke. Let me just take this off. And we can show you that structure. It never broke. If the structure doesn't break, remember, I'll always tell you, and I can always repeat that for you to remember. We don't just take a trade because we think it's going to go up. It has to break out, it has to consolidate, and then I will be interested in that trade to the top. None of that happened, right? Yet one top trader, professional trader as he called himself, comes onto the chart and asks, where is your stop? You know what's very funny about that? If you're a pro, why are you asking me for a stop? You shouldn't. There's no reason. You're not there to ask for a stop. If you're there to give, you're there to help, right? Not to ask. And the reason you ask is because you want to look smart. You want to prove to everybody, hey, he's got the trade. It didn't work. He lost that trade. So what if I lost the trade? I mean, at the bottom end, we all lose trades. It's not like I don't have losing trades. The point is, so what? What is your point? What is your agenda? What are you trying to push? That is what the point is. That is what I didn't like about that comment he made. Where is the stop? Before him, about 6 people asked for the stop. And then what I did, I posted an update to the chart. I said, okay, The chart didn't work, and I give an update. All of you saw the update that it didn't break. You shouldn't be in the trade, because about 4 people before that wrote me and said, well, I got in the trade too early. Can you please help me? And I was like, okay. You shouldn't be in the trade. This is what it is. If you're in, put a stop, get out of the trade. Take, decide out, especially put that if they break this and if they consolidate under it, they're going to go. So the people, newbies who are in the trade, could decide to get out of the trade. And that is what we are looking for. Now I have to put, this is not a trade call, blah, 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 blah. It's just annoying set of, things. Yeah, anyone have seen me done something? I've never done something like that in somebody's chart. You'll not see me go to somebody's chart and ask them, hey, where's your stop? That's crazy stuff, right? Let's go. We're getting a consolidation. So we're getting a consolidation, and if this breaks here, you want this trade to the downside, right? Because we have an impulse, we're getting a consolidation, and we can look for another impulse. That's a good trade, right? So now we are actually getting a good trade setup. Not this one. This one was more or less than a trade setup because it didn't work out, but this is becoming a good trade setup. Right? Let's go. Punk ad, I actually finished the punk ad. This one just went up. Punk chief punk ad, we finished. Aussie, New Zealand. Let's look at this. Aussie, New Zealand is becoming interested now. One of my traders actually showed us this wedge this morning. I missed it, and he said, yeah, we have a wedge there, and wedges go to the downside, so that's a good one. You have a sell set up here, right? Remember this wedge here? I just showed you one in the pound yen. They all go to the downside. Actually, one of our traders, if I can remember who, I can't remember, sorry about that, but I remember he's in the room, probably somebody would remember him, who said, you have a wedge there, and then we saw it, and he said, yeah, perfect wedge. Remember this wedge here? Come on. Remember this wedge here? Very similar wedge. They go, right? So I don't think this one is going to go that far, right? Don't anticipate too much out of this one. I don't think this is going to go that far, but you're getting some consolidation here on a 1 hour. You can see that. So, if you get a little more sideways, or you can even take the trade whenever, you have to keep a stop here, and you're looking for this to come break this low here. About this is your target, actually. Right? That is for our traders who took the trade. I'm not telling you to do that, right? So don't blame me if it doesn't work out the way you expect, or you didn't manage the trade the way you should manage the trade. But they identify that. We identify an impulse. We identify a correction, and we're looking for a next impulse to the downside. Aussie Chief. By the way, I am not in that trade. Let me just make it very clear. My traders are in that trade. I am not in it. They took it way before then. They identified that wedge, and they took it before. When they showed me, it was too late for me, and I was like, I'm not interested. Risk to reward is no good. Let me just show you back. I don't go for those trades. Remember, I just explained to you about risk to reward. Potentially, this trade could only come here for me. And this is, if you take it here, this is like a 1-to-1 risk to reward. I'm not interested. You know what I'm interested in? I'm interested in this trade. Let me show you which trade I'm interested in. When they finish this move here to the downside, if they decide to turn, if we see divergence here and they decide to go back up, this is the trade I'm interested in. An impulse, a correction, and an impulse. So basically that piece to the downside, I'm not interested in it. I'm interested. I could wait. I have patience. I'll wait for this thing to turn. And while it's turning, I'm not ignoring it. I've ignored this chart for a long while. I'm trading other charts. But when this starts to go, I will be in it. I'll be sitting in it like no tomorrow. I'm not coming off. Right? That is what you do. You get one of those charts that has potential to go far, and you stick with it. So this was one I posted. And by the way, let me just show you just because of patterns. The same thing comes back to mine here. What we do weekly. I think I posted this in the weekly. I'm pretty sure this was a daily. This was a weekly, yes. The next big move to come. Right? Not this one. We weren't looking at this one. This was a historical low. The one previous to that. That one went down. That was this wave coming down. There was one going up here. I think in a daily. I'm pretty sure we posted this in the daily. Let me see. This wave, showing this wave going. It's taking a long time to update. Come on. Somewhere in here we posted when this was happening. For this wave to come. Nothing has changed from these charts. For this to come down here. And it's coming down pretty nice. When it gets somewhere in here, those of you who were in the daily webinar, remember some of you made some nice money in this first trade down, right? Some of you took it in here with me inside of the correction to the downside. You made some good one. It's actually dying out now. What that means, oh, no, don't do that. What that means is that very soon we will get a correction back to the top. We'll get one more of this. And when you get one more of that, we can take the next trade down. Right? So don't rush it. These trades, you want them like that. You want them to make that correction, and then you get them going down very nicely. Right? So this would be a very nice trade. If you get a trade to the downside, it's going to be short-lived. There's possibly one more trade here to the downside. Let me just show you that one. You could probably get one more trade here to the downside from this one, but it's going to be short-lived. As soon as they hit this low, they're probably going to go back up, right? It wouldn't go very far, so you have to be careful of that. Aussie yen is the next one. Very interesting pattern, very interesting charts. Put it in the daily. Nothing new. This one was posted. Wave patterns made simple. It couldn't be simpler than that. See that? What did it do? Watch these arrows. You're going to see the magic. See that? This was the only one that didn't come down as much as we expected. We were expecting within this channel one more little down. They actually broke the channel there, but they went exactly to the top. Come down back, and they're here now. So what are we anticipating? We're anticipating this big move here. And then one more downside. See the magic of that? That is the magic. That is the power of wave structure. You don't have to use advanced patterns and all kind of fancy things to do this. How do I know that you can put not one arrow, not two arrows, but a number of arrows that show you direction, what they're going to do? And you guys will keep this chart to see how it goes. It's how patterns behave. And when I said you know which direction that pattern should go, I mean you know which direction that pattern should go. Because if you're a pattern trader, if you understand patterns and you know how they behave, you know how they should go. That's it. It's not a guesswork. It's not a number game. It's not a nonsense that some people have in their head fixed that this is a number game or that the broker is out to get you. Or the next thing I hear people say is that this is it's a zero-sum game. That's the biggest BS you have in the market. That's the first topic I teach my traders. Why this is not a zero-sum game. It's nothing to do with zero-sum. As a matter of fact, we are not even players in the market. The biggest players are people who would care less about what the trade, what price is going to be today or tomorrow. 10 pips, 15 pips, or 100 pips. You're talking about big corporations like Gazprom. Gazprom trades billions and billions of dollars of oil and gas to the rest of the world, especially Europe. They are not traders, but they are the biggest traders in Russia. They're the biggest foreign currency trader in Russia. And yet, they are not traders. They are not speculators in the market. So they're not playing for a zero-sum game. Somebody has to win and somebody has to lose. They will change euro into rubles every single week or every single 2 weeks or every single month. They will change because they need those rubles. They need to pay their workers here, to pay for service in Russia. You can only pay in rubles. And all their gas and oil is sold in US currencies or in euros. It's not a zero-sum game for them. They may win or they may lose, but they don't count it as win and loss. It's priced in the profit. So it's not a zero-sum game. The nonsense you hear people say that you have to lose for me to win is the biggest BS you're hearing. We can all win as retail traders, and we wouldn't even move a pip. We wouldn't even move the market a single pip if all of us win. If all the retail traders in the world, were to win a trade on the euro, they would probably move the euro 1 pip or 2 pips. You don't have a say in it. You're just trying to grab your little piece out of it, right? If you can grab your little piece out of it, take it. That's the point. You have to understand where the market is going, and if you can follow it correctly, you're going to make your $2 out of it, and it will not affect anybody in the world. It's not a zero-sum game. Winners lose. It's just a buy and sell process. Gazprom doesn't lose if Gazprom sell euros now and the euro drop or the euro goes up. Gazprom doesn't lose or win anything. They're not counting it that way. They're not in a business of exchanging foreign currency for the sake of winning and losing. They're not in a zero-sum game with anybody. That's not how the market works. And if you believe that nonsense, the people who are telling you have no idea what they're talking about. Right? It has nothing to do with a zero-sum game. I hear that thing over and over, and I'm like, what the hell are they talking about? These guys don't have a clue what they're talking about. Here's what you want to do. Go read it up. Google Triennial World Report, World Bank Report, Triennial World Bank Report. Google it, read it up. It's knowledge. It's not just guessing work. It's there. It's telling you. It has everything about foreign currencies and how it's exchanged, what volume is exchanged, what banks is it. That is the first class I teach my students, and it's based on knowledge, not on somebody said something about a zero-sum game. Everything you do must be based on knowledge. If you want to be a good trader, it must be based on knowledge, not on nonsense, not on hearsay, they say, somebody said. People who have no clue what they're talking about, because it is not a zero-sum game. So we'll wait for a correction and we will trade it down. Maybe a smaller correction than we thought we were going to have. Let's see. You're going to have some correction here, and when we get the correction, we'll trade it down. We're looking more for something like this, right? We get something like this, we'll look for a next trade down. That's how simple it is. Right? What else? I think we can skip all the rest. They're useless. We don't do them. Some of you may be interested in silver and gold. I'll show you silver and gold, and we'll call it a day because it's too much time. I expect silver to go back up some here, and when it gets here, we will make a decision whether they're going to make one more down. It's very possible they will make one more down. Let me show you pretty fast what we're looking at. This structure will go up here, and after that, we may get this before they go. But this structure will eventually go up huge, even if this happens. Right? So when it comes to the top here, if you're in the trade, you will make a decision to take off some profit. And then we will see what it does, right? Gold, pretty simple. Look at this structure. They're consolidating here. You can see that every time they break, they go, they break, they make some consolidation here, they go. Your stop should be here if you're trading this, right? If you know how to trade that. Natural gas, oil, let's see what oil is doing. Oil is going down, but I advise my traders to stay out of it. It's becoming a dangerous game to trade this to the downside. Some political statement will create this thing, will make this thing spike up. It cannot stay very long so low, right? They will make a spike to the upside, so you got to be careful. The best thing to do is not to trade it. It's in dangerous territory. Natural gas coming down much more than we expected. Some of our traders are in short sell and they got lucky. The sell wasn't actually a sell to go, right? They're in a sell. So what we may find here is we may find a much bigger consolidation in here. Something like this or something like this. A much bigger consolidation before they go up. So it may be here in a longer time than we think. I don't think they will retest the low. They can retest the low. I don't think they will. We may see what traders call head and shoulder patterns. I don't work with head and shoulder patterns because head and shoulder patterns are telling you that it's an impulse. All head and shoulder patterns telling you there was an impulse, there was a correction, and there was an impulse to the downside. There is an impulse, there is a correction, and there is an impulse to the upside. That gives you what they call the head and shoulder pattern. But you're looking for, what I'm looking for is not head and shoulder. I'm looking for a corrective structure, this corrective structure, and then I'll look for that impulse. Very simple, right? So they may be making a corrective structure right now. You got to be careful. Watch it if you're trading. We'll watch to see if they start to make consolidations like this. These are sharp moves. Sharp moves, if they start to make very sharp moves, we'll be looking for wedge. If they start to make consolidation move, which is going up and down, we will look for a flat pattern and then we'll be looking for upside. So right now, if you're trading, you got to be very, very careful with the sells. Right? Everything for sells are looking very, very, not so great. Basically, that is all, guys. So we have, I think I showed you most of the charts. I didn't want to do that. I want to show just a couple. But because I want you guys to have a good view for the week, so you know how to trade, basically, I showed you everything. So if you have questions, we can take a couple questions. I don't think there's much questions to ask here, but we can take a couple. Somebody wanted the YouTube channel. You can just go here, click. Let me just show everybody very fast. I'll post it in for you. YouTube and bring it up. And let me just give you the YouTube channel. Come on, it's opening. I have to put it, if I leave it here, you wouldn't see. I need to put it in videos so you can get all of them. And click this, copy, and put it to you. Here you are. Just open it in your browser and you will get it, right? Basically. Okay. Any questions? I have a question about corrective structure. How do you know when a corrective structure is complete? Oh, that's a long story, my friend. That's a whole year of work you will have. So 6 weeks of training, and then 6 weeks of theory and practice, and then the next 6 months of practicing to figure out how the corrective structure is over. If I could tell you that in one sentence, it would be pretty easy, right? When do you trade breakouts, and when do you trade the reversal of the trend line? How do you know when to move your stop to break even? We look at structures to do all three of those. We look at structures for breakout. We look at structures for a bounce from a trend line if you're looking for a bottom, and we look at structure for breakout. It's all based on the degree of structure you're looking at, the time frame. We don't really say time frame when you're looking at structure. You look at degrees, because you can have two different degrees on the same time frame. So it's mostly what degree. So if you're trading 240, you're looking for a lower level consolidation. What resources would you recommend to begin with Wave? Read the Elliott Wave principles. That's a good one to begin. That is actually the work of Elliott. It's not the work of Proctor. They just rewrote the book. It's the work of Elliott. You read that, but that will give you very basic stuff. Most people, even reading the book, got more confused than they can. So, but read it, and when you figure out you're not getting anything, give me a call and we'll talk. You can join my trading. You can take my course and learn. Do the higher time frame apply? 1 second. Do the higher time frames apply more pressure to push the currency? No, it's not about the higher time frame pressure. It's about when the higher time frame structure is going to end, right? It's not about the pressure for it to go one way or the other. It's about, by nature, these things happen. These structures happen. It's part of nature, right? It's like a tree grows, right? That's how a tree should look when it grows. You plant a tree, you know how it's going to look when it grows, right? That's how nature behaves. That's the genetics of that. When a person is born, you know what he'll probably look like, right? Very close, like a human being, right? It's the genes in it, right? What is in the nature of the market that creates this to go? I don't know, but it behaves this way over and over and over. It's something that repeats itself, right? So you can see it, and once you start seeing that, you know what it's going to look like. And if it behaves that way, if there is no defect in it, and it behaves that way, basically, the tree grows normal, you will know what the tree would look like, right? Some trees may take a slant and don't grow the way they should grow, right? If that happens, no big deal, right? That's all we're looking at. So it's not about the higher time frames taking dominant or not. It's not about, if a higher time frame structure is ending there, you don't want to be in it, right? Because that structure is ending. No little lower time frame will not push it through. Can you speak a little about the exit, Anil? So it's based on what you... No, that exit strategy is a strategy we use in our room. You will have to know everything I teach you before you can understand how to use that exit strategy, if you're talking about that, right? Thank you, Anil. What point do you move stop to break even? When I have another correction and another impulse, then I move my stop to break even. Or if I have 4 to 6 the pips up, and I want to keep the trade for a longer term, I'll just move it to break even. Sometimes like the euro yen, I had 140 pips up. I move it to break even, and I got plus. Well, I got break even out of it, right? Basically, I wanted to keep it for the whole 1,000 pip run. Advanced stuff you should read about. Asking to come to your courses. Oh, no, you don't need any advanced stuff if you want to come to the courses. You need the basic stuff. You need to finish all the basic stuff. You need to know the terminologies. You need to know. Well, you can read the Elliott Wave book at least once. If you haven't read it, you will read it during the course. It's a 6 weeks course, so you'll have enough time to read it. How do we start to analyze chart? How do you start to analyze chart? Wow. I don't know. You start by learning. You start by reading up a lot about first the terminologies, and then wave structure and all of that, and you finish the courses, and then you're able to do it. That's like the very, very start. You start by reading Elliott Wave's book, and then maybe that will take you on. And the breakouts, we also wait for a reversal and what confirmation you take it. Proper breakout of the structure. What confirmation? Lower level structure. Like I said, I guess you guys are not figuring out what I mean by that, right? But here's the thing: for me to show you what I mean by that, I need to show you everything that I teach is for the last 6 weeks, for our 6 weeks course, which is not that easy to do, right? In one webinar. Who was my guru? The guy who was my guru was the guy who doesn't want to see me around very long, because I used to really put some questions on him. He didn't teach me Elliott wave structure or anything. He used to teach me support and resistance. Can you believe that? The guy I actually paid the guy 5,000 to teach me to trade, and he was teaching me support and resistance. I was so pissed off, but anyway, I had fun there. I was only for a couple months there, and I had fun. But he was very, very strong and stuff. And I keep telling him, those things don't work. After about 4 months in his class, I said, those things don't work. I actually told him a lot of them, they don't work. They're not working. I figured it out pretty fast, right? That it's not working. It's not going the way it should work. All the patterns are pretty much accurate on any trade, on any pair. That's for which pair has more accuracy in the pattern. Any one of them. On the breakouts, we also wait for reversal and confirmation. We had that question already. Yes, it's based on structure. In what part of the structure do you take the trade? What part of the structure? I try to get it at the very start of an impulse. Why do you think Aussie CAD is bad? Not that it's bad, it's going into consolidation now. Anything that is going into consolidation is not good. Just that I said let's skip it because it's going into. Why you don't? I just used probably the wrong wording, and I said it's bad. Sorry if I did that. I was going to say that it's dangerous to trade because it goes into consolidation. Why you don't trade stocks? Are they? Well, I actually learned to trade from currencies. No, stocks are okay. I learned to trade from currencies. The account I'm trading is only for currencies because when we open it for currencies and metals, which allows me to trade silver and gold. I don't trade gold. I trade silver only. Right? But eventually, I think I will be trading those. I just need some more time. We can do the analysis on them. It's the same analysis, same way of analyzing any chart. Can it be done in retracement? If you know how to trade it in a retracement, yes. If you know what you mean by that, right? That's the whole point. If you can do that, then yes. If you also know that breakout is not the end of a lower level structure, I think that's the part that gets most trader. They can't figure out if the breakout is the end of a lower level structure or not, and that's the catch in it. It could be the first wave, not necessarily of a 5-wave impulse, but it could be the first wave of something, because of a 3-wave impulse possible too, right? Because it made a very sharp move up. Honestly, we didn't expect so much pullback into it. We thought it was going to consolidate. The traders who took it, they should take. I think the traders who took the first trade, which is this breakout here, should take a +1, right? If you took this breakout here, remember I was showing it. If you took this breakout here, you should at least have a break-even trade, right? That's the minimum you should take, is a break-even trade, especially when it starts to break out of this structure here, right? If you understand what I'm talking about. And that's why really complexity comes. For my traders, they should have taken, some of them even take profit, but the break-even trade was a good one, right? When it starts to come down, this was a sell setup we identified in a lower degree. See that sell setup there? We identified. Some of my traders took it, and some of them are still in the trade with their stops at break even, right? Now, at some point, I think it's going to get a little dangerous, and they may exit the trade. It has somebody. Sorry, I couldn't catch what you were saying. At how many pips profit do you make? No, it's not about the profit. It's not how many pips profit I move to break even. It's based on the structure. But like I said, sometimes I'm trying to keep the trade for a much longer run, right? The euro yen was a good example I was giving of late. There were other trades like that. I'm trying to keep it for the much bigger move. So I have like about 100 pips up. And I look at it and I said there's a potential of this thing going for an next 1,000 pip. I would put it to break even. And sometimes it comes back and get me for +1. That was the euro yen did, right? Twice, by the way, right? One time was 120 something or somewhere around 100 plus, and the other time was around 80 something. I just moved them to break even, and they got me for break even. Well, that's okay. That's part of trading. But there's too many questions. Will you please put? Yeah, I'll put it in YouTube. You guys should share the link. If you can, that would be great. Don't forget to share the YouTube link. When is the next webinar? I don't have any idea. I don't know. Thank you. when you define a breakout from the structure, do you enter immediately? We've had that question so many times. No, I don't enter immediately. I wait for corrective structures to confirm itself. But I can't give you that strategy. Don't ask me 100 times. You will not get it, basically, right? Tell me about confidence. How confident you are about your trade? Oh, this is a good question, by the way. Tell me about confidence. How confident are you about your trade when you are in? And if it goes wrong direction, what do you do about it? You close, you wait for it to hit the stop loss. Very good question. That is a question we can talk on. If you guys have 5 minutes, most people have left. We have only 124 people, but that's okay. 124 people still interested in the question. So here is the deal about that. When you enter a trade, you must know, let me just get this very clear. You must know where your target is. You must know what you're targeting in the trade. So if your target is 20 pips away and it hit 20 pips, you should get out of the trade because that was where your target was. And where your stop was where you're going to exit if it didn't go your way. So what if it takes you out? Takes you out, that's it. No big deal. Nothing is wrong with that. All traders take losing trades. Here's the problem with traders. They don't put the stop. And when they start to go against them, they start to panic, and you will never pull that button. If you start to panic, you are not going to close that trade. And it will go more and more against you, and you will not close it because you're in panic mode. And here's what you don't know. This is what happens, and I can give you a run. It's going down. It pulls back. Traders buy here. It goes up a little, and it starts to drop against him. He initially wanted to get out somewhere here, right? That's probably initially where he would like to get out, or he had a stop there. And it's coming to his stop, and he was like, oh, it's 20 pips away from my stop, and then it's going to go back up. Because that happened to me the last time. So he pulls the stop out. And it goes down. And then it starts to come back up like this. And he's in profit here now. And he says, yes, it's a good thing I pulled that stop. You see, it's going up back now. And then it does this. And now he's in panic mode, and he cannot close the trade. It starts to go back up, and he was like, yes, I got it. And it drops again. You seeing something? All of you guys seeing what's happening? Right? And it drops again. And guess what happens? He closes it here because now he's in total panic. Or either his account is gone or he closes it here, and he watch it does this. See that? How many times has that happened to any of you? And here's the reason why. You don't have a clue what's happening in here. You don't have a clue what's happening in there. You don't know structure. You don't understand what the chart is doing. If you don't understand what the chart was doing, and we have something called an exit strategy, when it does this, you should get the hell out of that trade for positive. You are God blessed you had a chance to get out for positive and you didn't. Get out of the trade when it pulls back. Right? So traders called me a lot of times and said, help me in this trade. And I'm telling you honestly, I would not tell a trader what to do and where to pull a trigger. And I'll tell you why. I was doing that for a trader once. And every time I said, close it now, I would hear a yes. Okay. A couple hours after I said, wonderful. It's a good thing you closed it. No, I didn't close it. I'm still in it. Like, why? Well, it was going up again. It was going in my direction. It was, yeah, but that is when you got to close it. When it's going up to give you less loss. But I thought it's going to go up more and then I'll get positive. No, you waste the thought because it's not going to do that. And you actually take a loss. And traders do that day in, day out. Because they don't understand how structure moves. They believe if it's coming back up again to them, they're going to make a winning trade now. So they'll wait for it. And that's the dangerous point. When you understand structure, you will know that that's a corrective structure coming up, and that is where you need to get the hell out and look for a sell. You're in buy Euro Oz and you have that problem. Where would you buy Euro Oz to have that problem? Euro Oz is actually going up. You shouldn't be in that problem, right? I don't know where you could buy Euro Oz here, you're pretty safe. You could buy Euro Oz here, you're pretty safe. If you bought Euro Oz here, even you're safe. Where did you buy it? If you buy Euro Oz at the top there, I don't see a buy setup anywhere at the top there. Even if you bought at this top, you're pretty safe right now to exit the trade. So the only place you could buy Euro Oz where you're in trouble is at the top here, and I don't see a buy setup there. I mean, honestly, I don't see why you should buy there. Right? There's nothing showing you bought at 1.57. Let's see where is 1.57 just for that case, if we can help you. 5714. That's 5790, 57. You're in profit. Why are you worried about it? I thought you're in a bad trade. You're in a good trade if you bought 5714. It's going up very nicely for you, right? You don't like the trade, put it to break even. You like the trade, keep it. Very rarely I close the trade before it hit my stop loss. Especially the only time I'll do that is if I see a change in structure. You don't know if you should keep it. You have to think of what was your basis for buying it. If here's the thing, if you want to know if you should keep a trade, it depends on what was your reason for buying it. If you're buying it because you thought it's going to go up, what makes you think so, and has that changed? That's the question. If you think it's going to go up, has the reason that you thought it's going to go up changed? If that changed, well, then it's no longer going up. Trend continuation. Well, it's still in the trend. So the only time that reason will change is if it breaks the trend, right? If you're looking for trend continuation, this is your trend. So the only time that reason, your reason for buying will change is if it breaks the trend. If it breaks this trend here and start to go down, then your reason is no longer valid. You follow what I'm saying? So you must know why you're doing what you're trading and how you're trading. And if that doesn't change, everything is okay. Until that changes, well, then you have to take the loss, right? If it comes down back, then okay. Basically, if I don't see it much as a trend continuation. I think there is a possibility for one more upside, like I said in my thing today, but I'm not going to tell you to take your trade off because of that. There's a possibility they could come retest this low and then go back up. And if they do that, then we will be in that trade. Our reason is a little different from yours, but we will be in that trade, and then we look to exit it because after that it could come down. So I can't say you have a bad trade, but you may have got an early entry. Based on what I'm looking at, you may have an early entry. Now, I'm not telling you to close the trade because that doesn't mean I could be wrong. This thing may go up from here, and I would miss the trade. Here's the thing. If this goes up from here, you're in a good trade, and I miss the trade. If it comes back here and then start to go up, I'm going to be in this trade, and then we will all probably be in a good trade if you're not out of the trade by then. Right? I think I did that already. You will watch the webinar on YouTube. You'll get it. Pung USD. Let me just show it for those of you who are still here. We're looking for some upside. We have a corrective structure here now. You can see that very clearly. We're looking for this trade here. So let's go to the we're in the 15 minute. Don't tell me we're in 15 minutes. Yeah, we are actually on the 15 minutes. So this is the trade I'm looking for. If they break this structure here, we're looking for that trade. But you can see with this what they're doing here. It looks like one more down here. And then you get this structure. And then we can look for that up on the break of this structure here. This trade. But I'm not trading it for that trade. Right? That is not the trade I'm trading for. If this keep going down, I'm not interested. It could go down, right? I'm looking for it to break this structure. The only reason I'll take this trade is not for it to go down, but for it to actually make a deeper correction. If it does that, I'll have a good trade. If it doesn't, well, then that's okay. I'm looking for this trade to come back here. The reason I want to trade this 15-minute here so that it could come back here. That's the reason for my trade. So, okay, guys, I think we have spent more time than we need to. Thank you for coming. Don't forget to spread the YouTube videos, and I will see all of you. Thank you very much. You're a great group. Bye-bye.